Hello everyone, Sergio with another video on my new channel, Sergio Avedian. Pretty please, with sugar on top, subscribe and turn on all notifications for you to receive all these videos in a timely manner. So on the last video, I kind of hinted on what I look for when I feel like a market turn is happening. On the first video that we put out, I introduced myself. So basically, it's education, it's information, trading advice, and not financial advice. But with my 30 plus years of trading equities, derivatives, and whatever is moving, basically, that could be profitable for me. I think I have a wealth of information to share with you all. And the important thing is, you know what they say, don't give anyone a fish, teach them how to fish. And that is basically what I'm going to try to do. So on the last video, I talked about what indicators I look for or what I watch as far as market turns are concerned. I feel like the last Monday specifically, and started with Friday the week prior, the market is experiencing a little bit of a sell-off, which is normal on uptrends. And I talked about uptrends and all that good stuff in the past video. So if you missed it, please go check it. Today, I'm going to talk a little bit about what I do when I'm feeling or seeing all my indicators turn in a way that could be profitable for me, even if the market's going down. A lot of people think you can only make money when stocks go up or indexes go up or Bitcoin goes up. Well, that's not the case. So markets go up in a stair-step fashion. In my 30 plus years, I've seen this many times, and then they take the express elevator down. I truly can say that I make more money when the markets are going down than they're going up. Because when they're going up, honestly, certain things have happened over the past 30 years that markets go up a lot further and a lot higher than I expect them to go up, because I'm a human. If anybody tells you, I buy the lows, I sell the highs, or I sell the highs and buy the lows, don't buy it. It's never going to happen. You know, people only put out their profitable trades out there. I've experienced both sides, painful ones and great ones, and I'm here to share them with you in the future and starting now with this new channel. The important thing here is to make sure you guys understand the tools that are necessary to be able to make money when things are going sour, when things are going south, when things are getting nasty. And for me as a trader, volatility is opportunity. The faster things move, the faster I can make money, or I can lose money, obviously. But on down markets, I think the profitability factor increases for me just for the fact that I have all the tools in my toolbox and I know which tool to use when to take advantage of drawdowns or pullbacks, as they call it, or bear markets, or, you know, some people are calling for a crash in 2024, right? So you have to have the tools ready, and you have to know which ones to use to profit from what's going on. So today I'm just going to simply talk about a couple of things. So I'm going to put up a couple of charts. These are my stock index option chains. Options, I'm going to get into heavily, which are called derivatives. I'm going to explain them on Power Hour and other videos going forward. So before I forget, please join me and possibly Chris every Monday and every Friday right after the market closes at 1 p.m. Pacific, 4 p.m. Eastern. First half hour is going to be informational, educational, and the next half hour is going to be Q&A, answering your questions. So subscribe, turn on notifications so you get notified when the live streams are taking place. And look, without you guys, there is no channel. Without you guys, there is no live stream. What am I going to do? Just sit there and watch myself? So the more engagement we have, the better, obviously for the channel, but also for everybody else. We can disseminate information a lot faster. So in these next two charts, you guys are looking at something called put options. Options have two kinds. One is called a call option. One is called a put option. Some of you may know, some of you may not know. Again, you can Google what a call option is. You can Google what a put option is. But I'm going to explain in detail going forward what they are, when they should be used, how they should be used. And if you guys look at it, this option chain that I call it, meaning they have many different strike prices, as they call it, and one expiration, which is May 17th, you see pluses, right? Well, market went down. How come these things are pluses? Because they are put options. Put options are gaining or will gain in value if the market goes down. So just like I said, what tools to use, how to use it. There are many other tools. You can short stocks. You can short indexes. You can short futures. Now, what does shorting mean? Shorting means selling something without owning anything. And obviously, this is very counterintuitive because every time I try to explain shorting, people go like, how can you sell something without owning it? Well, you certainly can. In our markets, we have a mechanism called shorting. And a lot of hedge funds make money shorting things, meaning expecting the value of the underlying asset to go down. You can literally short anything. I mean, you can short oil, you can short the dollar, you can short currencies, you can short indexes, you can short individual stocks. It's a very risky thing to do. Obviously, the sky is the limit. So all the hedge funds went broke in the mean days of the pandemic, when GameStop and Bed Bath & Beyond was out of business now, or AMC Theaters, right? I mean, we all know what happened to those stocks. They bankrupted a lot of professionals. So, shorting is risky, but shorting is also very valuable. It creates liquidity for the marketplace, and you can make a lot more money, I believe, shorting things or betting that they're going to go down, that they're going to go up, especially if you figured out if the market is on a downtrend. And I said this on the past couple of videos. I mean, I personally make more money when things are going down than they're going up, because things go up a lot further and a lot longer than the old days, for the fact that the Federal Reserve of ours, which I'm going to talk about in many videos coming up, which I'm definitely not happy about, over the last 25 years, is manipulating the markets. Without a question in my mind. Some of you may push back on that. Some of you may say, Sergio, Federal Reserve is needed. No, Federal Reserve is only needed to regulate things. Federal Reserve should not be involved in buying things like mortgage-backed securities and, doing any of that stuff. But again, that's for another video. So these two screenshots that I'm showing you kind of tell you that market went down, last Monday by 1.8% on the triple Qs and 1.2% on the S&P 500. Okay, well, these screenshots are from that day. What happened to these put options? Put options meaning for people who purchase these options, they made money. That means you can make money when things are going down. So, with that said, end of the video. Join me coming up on Monday, our first Power Hour, possibly with Chris, at 1 p.m. Pacific, 4 p.m. Eastern. And again, we're going to repeat that for the foreseeable future on Fridays as well, on Mondays and Fridays. We'll see what kind of traction we get. So for that, you guys need to subscribe, turn on all notifications, and make sure to join us during the live streams. Be profitable. A lot more coming.